Have you ever wondered if the government is secretly hiding money from you? Well, they're not exactly hiding it, but there are tax benefits so obscure that even seasoned accountants sometimes miss them. Today, I'm going to reveal 7 secret tax deductions and credits that could put thousands of dollars back in your pocket. And trust me, number 6 is going to blow your mind because it involves something you probably do every single day. Let's start with something that sounds almost too good to be true. Did you know that if you move for work, you might be able to deduct the cost of moving your pets? That's right. Fluffy and Rover could be your ticket to tax savings. The moving expense deduction covers reasonable costs associated with relocating for employment, and the IRS considers pet transportation a legitimate moving expense. We're talking about airfare for your cat, specialized pet transportation services, even the cost of boarding your animals during the move. Most people know about deducting moving trucks and storage, but they completely overlook their 4-legged family members. But here's where it gets interesting. This deduction isn't available to everyone anymore. Due to tax law changes, it's primarily reserved for active-duty military members. However, if you qualify, you could potentially deduct hundreds or even thousands, depending on how many pets you have and how far you're moving. The key is keeping detailed records of every pet-related moving expense. Moving on to our second hidden gem, and this one involves your morning coffee routine. If you're self-employed or run a business, you can potentially deduct the cost of business meals, including that daily latte meeting with clients. But here's the secret most people don't know. You can also deduct meals when you're traveling alone for business purposes. That breakfast at the airport, lunch during your conference, dinner after a long day of client meetings, all potentially deductible at 50% of the cost. The magic happens when you understand the nuances. The meal doesn't have to involve other people. You just need to be traveling away from your tax home for business purposes. Keep those receipts from your solo business dinners because they add up faster than you think. A business traveler spending $200 monthly on meals could see a $100 annual deduction, which translates to real tax savings. Now, let's talk about something that affects millions of Americans but rarely gets discussed in tax planning circles. If you're caring for aging parents or have adult children with disabilities living with you, you might qualify for dependency exemptions that most people completely overlook. The secret lies in understanding the support test and gross income requirements. Here's what blows people's minds. Your adult child doesn't have to be unemployed to qualify as your dependent. They just need to earn less than the annual gross income threshold, which changes yearly. If your 25-year-old child has a part-time job earning $4,000 annually while living with you and you provide more than half their support, they could qualify as your dependent. This could mean additional tax credits and deductions you never knew existed. The same principle applies to elderly parents. If you're contributing significantly to their care, housing, or medical expenses, you might qualify for dependency benefits even if they don't live with you full-time. The key is documenting your financial contributions meticulously. Our fourth secret involves something every homeowner deals with, but few understand the tax implications of: energy efficiency improvements. Beyond the well-known solar panel credits, there are numerous smaller energy-related deductions that fly under the radar. Installing energy-efficient windows, doors, insulation, roofing materials, and HVAC systems can qualify for federal tax credits. But here's the insider knowledge. These credits often stack with state and local incentives, creating a compound benefit that dramatically reduces the actual cost of home improvements. Some homeowners have effectively upgraded their entire home's energy efficiency while paying only a fraction of the sticker price after combining federal credits with local utility rebates and state tax incentives. The secret sauce is timing these improvements strategically and understanding which improvements qualify for which programs. A smart homeowner might coordinate window replacements with HVAC upgrades to maximize both federal credits and local utility programs simultaneously. Now we're getting to the really interesting stuff. Did you know that certain educational expenses for your children can be deducted even if they're not attending traditional schools? Homeschooling families often miss significant tax benefits because they don't realize that educational materials, curriculum, supplies, and even certain technology purchases can qualify for educational tax benefits under specific circumstances. The key is understanding how to properly categorize these expenses and which tax provisions apply to alternative educational approaches. Some families have saved thousands annually by properly documenting and claiming legitimate educational expenses that traditional families might handle through school systems. Here's where things get really fascinating, and this is that mind-blowing sixth secret I mentioned earlier. If you use your smartphone or internet for any business purpose, even as an employee, you might be able to deduct a portion of these expenses. Most people think business expense deductions are only for business owners, but employee business expenses still exist under certain circumstances. The secret is understanding when and how employee expenses can be deducted, particularly for expenses that aren't reimbursed by your employer. If you're required to use your personal phone for work calls, maintain internet service for remote work, or use your car for business purposes beyond commuting, these could potentially qualify for deductions depending on your specific situation. What makes this particularly powerful is that these are expenses you're already paying. You're not spending additional money. You're simply capturing tax benefits from existing expenses. That monthly phone bill and internet service you pay regardless could potentially provide tax benefits you never considered. Our seventh and final secret involves something that sounds complicated but is actually quite straightforward: the home office deduction for remote workers. With remote work becoming increasingly common, more people qualify for home office deductions than ever before. But the secret isn't just claiming the deduction. It's understanding the simplified method versus actual expense method, and choosing the approach that maximizes your benefit. The simplified method allows you to deduct $5 per square foot of home office space, up to 300 square feet maximum. But the actual expense method lets you deduct the actual percentage of home expenses related to your office space. For some people, the simplified method is better. For others, calculating actual expenses yields higher deductions. The key is running both calculations and choosing the method that provides greater benefit. Many people default to the simplified method because it seems easier, potentially leaving money on the table. Others assume the actual expense method is too complicated and miss out on significant savings. What makes these tax benefits truly secret is that they require proactive planning and documentation. The IRS isn't going to send you a letter suggesting you claim these deductions. Your tax software might not prompt you about every possibility. Even professional tax preparers sometimes miss these opportunities because they require specific knowledge about your unique circumstances. The real secret to maximizing these benefits is maintaining excellent records throughout the year, not scrambling to find documentation during tax season. Create systems for tracking potential deductions, keep receipts organized by category, and document the business purpose or qualifying circumstances for each expense. Remember, tax laws change regularly, and individual circumstances vary significantly. What works for one person might not apply to another. These strategies require careful consideration of your specific situation and current tax regulations. Consider consulting with a tax professional who can evaluate your unique circumstances and ensure you're maximizing every legitimate benefit while staying compliant with current tax laws. The bottom line is that legal tax optimization requires knowledge, planning, and documentation. These 7 secrets represent just the tip of the iceberg when it comes to lesser-known tax benefits. Start implementing these strategies today, and you might be surprised by how much money you can keep in your pocket come tax season.